Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, July 1st, 2015. Let's take a look at one of the key trades. We just banked on this 12.5% today by holding it for 2 trading days. That's it, folks. 2 trading days. I want to explore the reasoning behind it so you guys can understand why it was a high reward, low risk trade. The average person would have thought this was a high risk trade, but when I explain it to you, you will understand. So just a couple days ago when we were down here, folks, I picked up with our members in the research center, GREK. What is GREK? It's the ETF that tracks Greece. Now, we all know what's going on with Greece, what it's causing the market to do. Greece has been pounded relentlessly. Take a look at the daily chart. All right, daily chart has collapsed down. Look at the move just since earlier this year and late last year. I mean, you're talking about over the last 12 months down from 25 to 10. Think about that as a stock market. That's the same as if the U.S. markets went down on the S&P from this 2,000, 2,100-ish level down to, you're talking about, 600, 700, 800 maybe. Think about that drop in a year. We had that type of drop in 2008, 2009 over the span of about 2 years. This is much quicker. Now, notice what's going on down here. Notice how over here you're having a low, lower low, lower low, lower low, lower low. Look at how fast the lower lows were being made. And then look at recently, lower low, but barely a lower low, and barely a lower low. That's telling you you're reaching the end of a move. When you see that at the lows of a chart pattern, after a long descent, you can know that that's telling you it's getting close. Doesn't mean it's the exact low, but it means it's getting close. And when you're looking for high reward, low risk plays, that's what you want to begin to look for. Okay? So that was number one. Second thing is you have to think logically. The media is spewing a lot of fear, as is, the commentary from these news outlets in Europe. All the media is all about panicking. That's what they do, folks. They cause panic or they cause greed. You never make money by panicking or being greedy. It's just that simple. So what you have to do is you have to look between the lines. And you have to say to yourself, what is the key here? What do I really need to think about? And this is what I came up with, and this is why it was a genius play to go long just a few days ago on the GREK. If Greece gets kicked out of the euro, which is a good possibility, well, yeah, it's going to be tough for a couple weeks. But you know what? They're going to go back to the drachma, and all of a sudden, to go to Greece and to spend money on Greece and to get supplies and goods from Greece are going to become very, very cheap. Is that going to be good or bad for the economy? It's going to be amazingly good for the economy. All right, so that's one angle. That's if they get kicked out, which is what the market's worried about. So yeah, short term, of course, there might be a little blip in this, but with the chart so low, it's not going to go that much lower. The risk is very small. Now let's look at the other thing. Let's say they get a bailout. Well, then you're going to get a huge rally in Greece anyways, and you're going to spike up even in the short term. So do you understand how the reasoning there was solid? How you could say, okay, the chart is telling me it's coming to a low. Then you can put it on either one. Which are the two possibilities? They get kicked out of the euro, they don't. Kicked out of the euro, they're switching back to a currency where their economy is going to rebound. They get a bailout, which is the other side. They're going to do much, much better. These are the types of things, folks, that you must understand. And that led me to buy the GREK at $9.91 just a few days ago. We sold it today into the 20 moving average at $10.16, a $1.25 profit, or about 12.5% in just literally 2 days. Just 2 days. Now, if we go to the intraday chart, check out what happened. Was that a good sell when I sold it right up here? Absolutely. Look at how it's faded. And where did it go? Right into gap fill. Guess who bought it again today with members here at gap fill? Yours truly. Now, I only bought a half position because going into the long weekend, I do think there's a chance for it to flush again, and we might buy the other half to bring our average down. It might flush down here if things don't look good and people don't want to hold into the weekend. But I'd rather have that exposure just in case a deal is announced before the long weekend here. Remember, July 4th, markets are closed on July 3rd, Friday. And again, look at the bounce already. It's starting to stage. This is an awesome bounce. Look at this thing go. Wow. Just ripping up. So in any case, I hope you guys understand here. This is the thought process behind another big winner in the research center. Just think about it. Even if you just had 1,000 shares of this. And by the way, look at this thing go. And we just bought at $10.25. Now it's almost 50 cents, 40 cents here. But in any case, Think about the logic and understand that. And that's what we do here. We have a PPT methodology, which is proprietary. And that allows us to get rid of all the fear, all the greed, and focus in on the pure charts. And when we do that, we make money. That's simple. All right, guys. Come join us here at InTheMoneyStocks.com. Take the 7-day free trial to the Research Center. Start making some money like we are, like our members are. Take care.